Hi there traders, this is Steve Miley. The market chart is for FX Explained and our regular weekly macro watch update. The week commencing the 10th of August 2020, mixed signals but risk on theme stays intact. So we're going to kick off looking at the macroeconomic and geopolitical developments over the last week in here as we started August. While the Q2 earnings season finished off and went very well in here, really strong results across the board for many of the major stocks in here, and particularly some of those FANG stocks in here posting really strong results in here. Seeing significant rises in shares of Amazon and Apple in here, particularly Google also doing well in here. So markets surging to the upside in here. US equity indices benefiting, the Nasdaq benefiting in here. S&P 500 now closing in on its all-time high as we saw a strong Q2 US earnings season pretty much wrapping up in here now. And the macroeconomic data over the last week has stayed solid. We've had global market PMI data. That's been very, very strong in here. Again, last week, both service sector and manufacturing sector. We have had the US version of that, the ISM, Institute of Supply Management data, also looking very strong. And the US employment report that we had on Friday, pretty much in line with expectations. But markets in here taking it fairly positively overall in here with the US equity indices again stuck up at and near to recent recovery highs and getting closer, as I say, on the S&P 500, the all-time high. So still very solid macroeconomic data coming through, not just in the US but globally as well. And we've seen positive coronavirus treatment results and vaccine hopes from Remdesivir, from Moderna. So overall in here, the hopes for a vaccine as well in here, all keeping markets in here in a more positive tone in here, as we've had some slight positives continuing to drip through in here after some very kind of positive results and hopes that we saw through July, that extending into August. But markets are still caught between this positive improving economic data and the concerns around COVID-19 in the US, particularly those western and southern United States in here continuing to have significant levels of COVID-19 infections and cases. Hospitalisations and deaths a real concern, but not just in the US in here. We've also got global concerns. We've had significant new outbreaks in France, in Spain, and in Victoria State in Australia. On top of that, we've also had US-Sino, US-China tension have been raised over the past week again around executive orders from President Trump regarding TikTok and WeChat. And over the weekend, we also had Trump signing off executive orders for coronavirus relief after we had an impasse between lawmakers in the US to put into place further relief measures in here regarding coronavirus pandemic. Let's take a look at how all of this has impacted global financial markets. Well, the S&P 500 continues to go from strength to strength and is now within about 1% of its all-time high there. So the US equity indices, generally speaking, across the board, very, very strong in here. The US dollar weakness that we're seeing, which we'll come and talk about shortly, is helping those US equity indices despite the cases in here and the deaths and the hospitalizations for coronavirus, and also the economic recovery in those FANG stocks, those tech stocks, those big tech stocks in here, driving the US equity indices, the Nasdaq and the S&P 500 higher. European equity indices not doing so well in here. We have had a bout of euro weak strength in here, and that euro strength driven more though by US dollar weakness, but the euro strength in here weighing on European equity indices, and also those outbreaks in Europe in here, those new outbreaks in Europe, seeing an underperformance by European equity indices from late July into early August. US Treasury yields continue to push lower in here. We've moved to more recent lows and also getting closer to those spike lows that we saw back in March and April of this year. So low yield environment being helped by the bond buying program from the Fed, but also this is a reflection of kind of a mixed signal. Concerns around the global economy, concerned around the US economy in here, keeping US Treasury bonds bid. That's pushing them down to US low yields in here, US Treasury bonds at super low yields. The US dollar also weak in here, partly because of those US yields, partly because of the numbers of the cases of COVID-19 in the US. All of that keeping the US dollar weak in here, alongside the fact that we're kind of staying in a risk-on environment, and the US dollar seen more as a safe haven currency, so no demand from the safe haven. So kind of mixed signals coming from the US dollar in here with respect to where we are in either a risk-on or risk-on scenario, risk-off or risk-on. For us, we're still very much in a risk-on environment, being driven with those equity indices still going higher in here. And we're also in here, we're seeing on Friday, we saw a dip from a new multi-month high, and a multi-year high actually, for COMEX copper. In here, we have had a dip lower in here, with the market very much sideways throughout July, having made new multi-month and multi-year highs for the copper market. A sell-off on Friday. That sell-off on Friday, though, primarily driven by that US dollar rebound that we saw. So US dollar strength in here that we saw on Friday, weighing on commodity markets. And also weighing on gold in here. Remember, gold surging high up through 2000 at multi-year highs for gold in here, but dipping from a new multi-year high in here on gold on Friday. Again, a reflection of and a reaction to that US dollar rebound that we saw, having had that long bout of US dollar weakness, which has also helped gold push significantly higher. And finally, we'll take a look at crude. Crude popping higher in here. Decent rebound in crude. Crude popping higher last week to start August to above the WTI crude light future in here, pushing above 42.50 and opening risk up to the upside. We did get a dip back lower at the end of last week, but rebounding already in here again this morning. So we're going to move on to take a look at the week ahead now. Week commencing the 10th of August. What do we have? Well, central bank watch in here. We have the RBNZ this week in here, Tuesday night through Wednesday morning. We have the US and global COVID-19 cases still very much in focus. Watching those western and southern United States. Watching France, watching Spain. Watching potential further breakouts in Europe. And watching that breakout that we've seen in Victoria State in Australia. And looking ahead to the macroeconomic events and data this week, nothing of note really for today, for Monday in here at the point of recording. UK employment report and German ZEW survey we have on Tuesday. Going through Tuesday night through into Wednesday morning, we have RBNZ meeting with UK GDP and US CPI also on Wednesday. We get the Australian employment report on Thursday along with German CPI, and then those US weekly jobless claims data. And then Friday we finish off with Chinese retail sales and industrial production plus US retail sales. I'm going to wish you all a great trading week, and please do be safe out there. Take care. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.